Good morning, everybody, and welcome to the webinar. My name is Kabelo Sintumedi. I'm a technical consultant for CCS, a construction computer software group company. It is my pleasure to present this webinar to you. Today, we will be discussing selling rates and final quantities in Candy, which are often underutilized and are sometimes used incorrectly. This webinar is aimed at giving you a better insight into selling rates and final quantities. I will aim to keep the webinar within the allowed time frame of approximately 1 hour. Due to the large number of people logged into this webinar, we will not be able to answer any questions during the presentation. However, please submit your questions during the webinar with the provided function on screen. Afterwards, we will collate these questions and send the answers to everybody that registered for this webinar via email. Please note that the webinar will be recorded and you will receive a link to download it. We plan to host a webinar once a month on various Candy topics. Should you not be able to attend the webinar at the given time frame, then please still register for the webinar, as you will automatically receive a recorded copy of the webinar. Now, without further delays, let's get started. The first phase of this presentation will be based on selling rates, and the second phase will be based on final quantities. These are the topics I will be covering under selling rates: explanation of selling rates, difference between gross and selling rates, and on the second phase of this presentation, it's the final quantities, explanation of final quantities, methods of generating final quantities, reports based on selling rates and final quantities. Explanation of a selling rate. What is or what are selling rates? Selling rates are entered manually or copied from gross rates and represent the rates that will be charged to the client. Selling rates are agreed contractual rates between the contractor and the client. Selling rates are used for any revenue analysis. Selling rates can be locked to prevent and protect the rates from being changed by mistake. And lastly, selling rates will always be used for valuation submission to the client. The following topic: difference between gross and selling rate. I will use a PowerPoint slide and then practically do it in Candy. Gross rate. The gross rate is ideal for tender stage and is a calculated rate based on the net plus applied markup. Selling rate. The selling rate is mainly used at the post-tender stage as the contractual rate for printing the interim payment claim to the client. Adjusting the net rate or applied markup will not affect the selling rate and is therefore ideal for post-tender stage. A calculated markup column is available and calculates the difference between the selling and the net rate. At post-tender stage, net plus applied markup equals gross rate. So 100 plus 10% gives us 110. When the tender was awarded as above with 100 net and a 10% applied markup, Candy will give a total gross rate of 110, which is the rate that was sold to the client. Post-tender stage, we then copy the selling rate from the gross rate and lock them once they become the contractual rate. So at post-tender stage, we can clearly see that the rate is highlighted in red, meaning it's locked. Any changes made to the net or applied markup will affect the gross rate. For example, remodeling of the job for post-tender control. But changes made to the net or applied markup will not affect the selling rate, which are independent rates. You can further see my example. Above at pre-tender, we have a rate of 105 plus 10%, and it affects the gross rate, giving it a value of 115.50. And at post-tender, if we have the rate locked, as it's regarded as a contractual rate, with a net value of 105 and a calculated markup decreasing to 5%. Now I have a job in Candy called the Venshaft and Subcontract Tender, on which I will demonstrate on how a selling rate and when to get a selling rate and what are the benefits of having a selling rate in Candy. I'll select my first job, which is the pre-tender. Open the selling bill, which is linked to the B icon. Displayed is one of my customized documents with relevant column layouts showing net, markup, gross, and selling column on the right-hand side. Having priced a job and applied markup, selling rates can be established by copying the gross rate. Selling rates can be copied from gross at either pre-tender stage, meaning tender finalization, and can also be copied at post-tender stage. Now the first example of copying a gross into selling at pre-tender stage, which is tender finalization, is as follows. We would right-click on the selling rate column header and select copy selling rate from gross. Three options are available to overwrite any existing unlocked selling rate, copy a zero gross rate, and lock the selling rate after we've copied. So I'll select the last two options and click on OK. Click on OK to confirm the message that selling rates, 5 of them are updated. And please note that all the selling rates has an orange indicator, meaning all gross rates are copied into the selling rates column and are locked to eliminate any possible human error of overwriting it by mistake. Because the job is still at pre-tender stage, we would like to submit our finalized selling rates to the client with all amounts rounded off. We can do the following. We need to unlock the selling rates before we can make any changes. So we right-click on the selling rate column header lock or unlock selling rates, and select to unlock the selling rates. Once that option has been selected, the rates will no longer have an orange indicator, meaning they are unlocked. Now we do have a right-click menu to round off all the selling rates. So we right-click on the selling rate column header, select round off selling rates, and under decimalization, let's round all rates to 0 and display the rates to 2 decimal places. Click on OK and click Yes to confirm the changes. Calculate and see the heading totals for both the gross and the selling after it's being rounded off. Please take note of the following concerns when rounding off. Seeing that the rounding off of the rates is based on the 4 to 5 rule, and the decimalization between 0 and 0.5 will be rounded down, meaning that the value will be reduced. This could result in large reductions where the quantities are high. Always refer to this document layout to highlight these variances, and any adjustments that need to be made must be made in this document to determine the full impact. We can now exit the pre-tender job and access the post-tender job to demonstrate copying gross to selling at post-tender stage. I will now select the vent shaft and subcontract post-tender job. Click on the B icon to open up my selling bill. Well, in this case, let's assume the client has awarded us the tender and we would like to establish our selling rates by copying the gross rate. Same process, we right-click on the selling rate column header, copy selling rate from gross, tick the last two options to copy 0 gross rate and then lock the selling rate. After we've copied, click on OK and confirm the message that 5 rates or selling rates were updated. Click on Calculate and all the gross rates are copied into the selling rates column and are locked to eliminate any possible human error of overwriting it by mistake. Then check the selling amount to make sure that it balances back to the contract document. And if the totals do not balance, then go back to the problem items and both the selling rates and the quantities. And you can go to any individual rate, right click, and you have that option to unlock only that selected rate. Now that the job has locked selling rates, we will hand over the job to the site team and they will take ownership of the job for post-tender control. They now will have an opportunity to remodel the job to what they believe will be achieved on site. Let's have a look at the first item, clear and strip site. Double click on the net rate and open up the price code worksheet. And let's assume that the site team can produce a higher production of 800 square meters. And before I store the worksheet, please notice that the gross and the selling at this point are exactly the same. The moment we remodel and we store the worksheet, any changes made to the net or applied markup will not affect the selling, but it will affect the gross rate. Now, I would like to customize the document and add a column, selling less gross column, which will indicate to us how much profit or loss does the remodel job have in monetary value. So I'll control F1 to open the column layout. Under available columns, open special rates and amount. Select 12.6 gross or selling less gross rate difference and the selling less gross amount difference. Click on OK. Calculate. And you can clearly see the first item which has been remodeled. It has a positive gain of 0.07 and a total saving value of 199.50. Second example, let's assume the site team will purchase ready-mix concrete much cheaper. Better buying of ready-mix concrete. Open the resource list. And go to the concrete materials, the ready-mix concrete material. Now the site team can be able to buy the 20 MPa ready-mix concrete at 450. And 25 MPa at 600 per cube. Close the resource list. Click anywhere in the document to make it active. Then calculate. Observe the selling less gross column on all the concrete items and see more calculated markup on those items. Because we do have level headings, we can see how much money has the job gained. The calculated markup is derived from selling less net expressed as a percentage. To see this, we can customize the selling bill and add the selling markup column. So I'll control F1 on my keyboard. Under available columns, open the markup columns. Select 10.2, which is the selling markup. And I will position it between the double vertical line and the selling rate. Now see the difference between the applied markup and the calculated markup. The selling rate remains fixed and the calculated markup has increased in relation to the selling. All the concrete items are reflecting the positive gained amount. In this example, the values are all positive, and if your resource rates were more expensive than your allowable rates, these columns will reflect the negative value based on selling less gross and a negative calculated markup. We can also customize this document and insert the selling margin percentage column, as some users prefer seeing both the calculated markup and the selling margin. So I'll Control F1, which will open my column layout, select 10.3, which is the selling margin percentage, and position it as the last column. And you will see the last column displays the selling margin for each bill item. Reports can be printed on both the estimating module and valuation module based on selling rates and amounts with various quantity selection. I hope this will be a useful tool that you can utilize now that you have seen the difference between the gross rate and the selling rate. The second phase of the training, it's the explanation of a final quantity. What are final quantities? These are the anticipated ultimate quantity of the bill items, and the bill quantity will normally be used for the first final value and projection. Final quantities are used when uploading resource budget to BillSmart procurement. Final quantities becomes the key quantity for tender and post-tender analysis. And lastly, a job's final account is generated using final quantity. When do we need to generate final quantities? As a starting point, final quantities can be copied from the bill quantity column as soon as the job reaches post-tender stage. Any variations can be manually entered or adjusted on the final quantity column. Second topic under final quantities, methods of generating final quantities. I will also use a PowerPoint explanation and demonstrate the examples in Candy. Bill items, clear side, excavate trench, risk of collapse, cut away. And every item has bill quantities. When the job reaches post-tender, we copy the bill quantity into final quantity column. Any remeasure, we do not change the bill quantity, but we remeasure and put adjustments under the final quantity. Any variation order items, we've got one item, cut down and remove trees. Variation orders will only consist of a final quantity and not a bill quantity. Let's go manually illustrate the different methods of generating final quantity. On the job manager, I will open the vent shaft and subcontract valuation 1. and I will switch from the estimating application to the valuation application. Initial valuation setup has been set and the job is ready for valuation. I'll click on the V icon to open the valuation document. The last column on the right hand side is the final quantity column. At this point, any BillSmart user will need to copy all bill quantities to the final quantity column for them to upload their resource budget. If they leave the final quantities blank when uploading the resource budget, only the rates of the resources will be uploaded and a message will be displayed in BillSmart Procurement that all resources have no quantities. While in Candy, remaining quantities are generated using final quantities less actual quantities. Hence, it's important to have final quantities at post-tender stage. Now, the bill quantity will normally be used for the first value projection, so we need to copy the bill quantity to final quantity. First method, let's copy the final quantity from bill. Right click on the final quantity column header. Copy from selected quantity. Select the bill quantity as the source and green tick to confirm. Copy bill quantities to final for the selected items. Click on yes and confirm the message that quantities copied for final quantities for 5 items. Click on OK and click anywhere on your document to make it active. All the bill quantities have been copied to the final quantity column. Any remeasurements should be done on the final quantities and not the bill quantity column. Any variation order items added will not have bill quantities but only final quantities. Second method, measuring final quantities using calc panel. If there's a calc panel, a green dot is displayed in the quantity field. Now if you look at clear and strip site under bill quantity, there's a green indicator, meaning there is a calc panel for the bill quantities. To display the calc panel, on the document, click on View and select Display Quantity Calc Panel. Make sure you highlight the bill item first, which is clear and strip site, to view the measurement. So for us to see the bill quantities measured, we highlight clear and strip site. This is where details measures can be recorded to calculate the quantities for each bill item. To view or capture measurements of items, you need to highlight the bill items first and then select the type of quantity to measure. Now, under estimating bill, takeoffs can be measured for both bill quantity and final quantity. On the valuation bill, we can be able to measure bill quantity, actual, claim, and final quantities that can be measured. I will use a PowerPoint presentation to demonstrate measuring final quantities using our quantity takeoff. How to open QTO? You can access the QTO manager in the valuation application menu, advanced, and select QTO manager. Once you open the QTO manager, the following screen will be shown. Q2 Manager is the place where takeoffs are created, stored, renamed, deleted, accessed, and where the quantities from the takeoffs are copied back to Candy Bill of Quantities. Once the takeoff package is selected in Candy, the system will launch Candy Quantity Takeoff, and below is all the measured work for only one item, concrete in foundation, in QTO. A quantity type can be selected for every individual measurement. As you can see, I've selected my quantity type to be final. And now that a final quantity of 154.63 cubic meters have been measured in QTO and linked to a bill item which is concrete in foundation, the quantity can be transferred to the Candy Bill. How do we transfer the measurement to the Candy Bill? We open Candy and access the QTO Manager. Right-click on the package, which is the Vanshaft Final Quantity package. Select Transfer the quantities of this package to BOQ. Valuation document is customized and has all the QTO columns selected. The document shows the measured quantities from QTO with all the relevant references for easy tracking of measurements. Even though the QTO quantities have been transferred, it is still up to the user to decide which Candy quantities to use when updating. To do this, right-click on the final quantity cell to display the menu. Select Copy from Selected Quantities. A selection box appears which allows users to select which type of QTO quantity to copy. You have an option to select QTO Final, Bill, Claim, and Actual. Because we do have existing final quantity of 135 cubic meter, we need to tick Override Existing Items so that the final can be updated to the latest QTO final quantity. Once we click on Yes, the final quantity is now updated to reflect the final quantity measured from QTO. The fourth method I'm going to demonstrate, I'll also use the PowerPoint slide. It's measuring final quantities using the Candy Bill Quantity Takeoff. On the below bill of quantity, let's assume the final quantity for item F, which is C25 or 25 MPa concrete in ground slab. To access the bill quantity takeoff, in Valuation Application menu, click on Advanced, Manual Takeoffs, and select Bill Quantity Takeoff. The Bill Quantity Takeoff Manager will be open, and this is where you create and access or even delete your packages of measure. Multiple takeoffs can be created, each one representing a section of the job, a drawing, or a measure. A bill items can appear in many takeoffs used where one bill item holds the combined quantity for many sections. To create a new takeoff, right-click on the existing package and select New Takeoff document. And the following options will be displayed. And because we want to measure final quantities, then the first option, Update Final Quantities, should be selected. Then you can rename the new takeoff package to concrete, then select it to open it. Three quantities are calculated for each bill item entry: the final or bill, actual and claim quantities. The calculated quantities for a takeoff can be transferred back to the BOQ from Tools, Update Quantities from the takeoff. Alternatively, all the takeoffs can be updated from the Takeoff Manager, Tools, and on the Tools menu. How do we insert bill items into our new bill quantity takeoff package? Select one or many bill items from the BOQ. So you will size your quantity takeoff, top half of your screen and the bottom half will be your bill. Then drag them into the takeoff. Only items that exist in the bill can be used in this bill takeoff. Then concrete in ground slab is added. Once the item is added, concrete in ground slab is measured in cubic meters. The following dimensions have been applied in the bill takeoff column: 45 meters times 42 meters and 0.2 meters height, giving us a total quantity of 378 cubic meters. How to transfer the final quantities from the bill takeoff to the valuation bill? On the bill takeoff, the bottom right, click on Update. The quantities will be transferred to the valuation document. Now, before going through to the reports, I would like to show a screenshot of how remaining allowable gets calculated in the cost and allowables using final quantity. Below is document 1.1 under cost and allowable by period. Allowable at completion is calculated using the final quantities times net. The final quantity is the anticipated quantity for the bill items at completion, and multiplied by the net rate produces the total allowable for the items. Final less actual to date allowable generates the remaining quantities. So if you generate valuation, first valuation will populate all the allowables. Your allowables to date less your allowable at completion will give your remaining allowable. The last topic is reports based on selling rates and final quantities. Before we can look at the reports, let's generate the first actual quantity for this valuation by typing in some actual quantity. I will now switch off the quantity calc panel. And under my actual quantity, go and generate my measures to date. The first item, it's 1,000. And next item is 400, 50, and 200 for C25 concrete in ground slab. The first report, it's going to be resource utilization allowable. To open my valuation report manager, I'll click on that icon. And there is 3 available reports that I've set up. The first report, it's resource utilization allowable. Customize this report and open the columns that were selected for this report. Bill quantity net usage, actual quantity net usage, remaining and final quantity net usage, as well as the amounts columns. I'll then preview this report. And you can see all 4 different types of quantity columns: the bill quantity, the actual, the remaining, and the final quantity. What's important is the remaining quantities is calculated using the final less actual. The next report, it's my valuation report on selling rates. Preview this report. And it's my claim quantity, the selling rate, and the selling claimed amount. This would be a valuation report I would submit to the client. The last report, it's final selling less bill selling. Preview this report and you can clearly see we've got the bill quantity, the bill selling amount, the final quantity, final selling amount, and the variance. So variation quantity and variation selling amount, which is the final less selling. I'm sure you will agree with me that Candy is continuing to be the leader in estimating and project control software, not only for the construction industry. Thank you for your time, and I trust that you will find the selling rates and final quantities useful in your daily use of Candy. Please remember to email your local CCS office if you want to know more about these features. We will keep you informed of the next webinar, and remember, if you cannot join on the selected time, then please still register and you will receive the recording, which you can then watch on your own time. Enjoy the rest of your day and see you at the next webinar. Goodbye for now.